All right, good evening boys and girls, men and women. Today's video I want to show us what I usually do. So as you can see, we've been in uptrend here. Yeah, so at this beginning we see like maybe a short-term low here, and then we see our setup here. We would have taken a sell, but as you can see, there is no sell setup. So what would we have done? So here, so after this sell, we have another buy here. Yes, we have a change of character at this point, but as you can see, we have displacement, but we have short-term low, we have a short-term low and short-term high, we have our displacement, but we did not have our imbalance. So what would we have done? We would have waited for a sell. Now the reason why I say we would have waited for a sell is because on a normal here, we have a buy here, we have a sell, we have another buy. So what we'll be looking out for now is a sell. So now let us look at the chart if we have an entry. Yes, so what do we have here? We have this low here, and you can see that price went up, came back down. You can see that price swept that low, but not with displacement, right? Price went down, right? Or let me use this low here. Price went down, create a short-term low, created a short-term high, then went down again to create another short-term low. That short-term low, this top candle here, you can see that it broke this low here, and that candle itself form a short-term low. Yes, with the candle at the right and the left, they form a short-term low, which price swept with displacement. Yes, so let me now show us. Let me zoom out. Yes, so here what do we have? Like I said, first of all, we have a short-term low here, we have our short-term high here, then we have another short-term low again. The first short-term low was broken without displacement, and we have another short-term low, right? We have another short-term low, but now that short-term low, the second short-term low was broken with displacement, and that displacement can do houses an imbalance. As you can see, that was an imbalance. So where would we have taken our trade from? So we would have taken our trade from here. It would have been a sell. Our trade from here, then our stop loss will be here. The percent is 0.11, meaning that we are going to be taking a 1:2. So here we have a 1:2. Yeah, we have a 1:2. As you can see, our 1:2 was it in less than how many minutes? Less than 30 minutes. We have 25 minutes and we have 25 bars, meaning that our take profit was it within 25 minutes. So that's okay. So here is now our trade, and after this sell, we have another buy again. Yes, we have another buy signal. Where do you have that buy signal? We have that buy signal here. After this sell here, the meltdown happen all the way down here. We have another higher low, we have another higher high. This higher high was now broken with displacement, right? And you can see, if you look at it very well, it houses an imbalance, a valid imbalance to be precise. You can see that price immediately tagged into it and then went all the way to this liquidity point here. Yes, price went all the way to that liquidity point. So this trade would have been a sweet buy actually. So we have 0.8, meaning we are going to take 1:3 for this trade. 1:3 for this trade. And you can see that we have what's wrong with my screen? Ah, yeah. You can see that we have 1:3, even more. Yes, we have 1:3. So that's how we trade in the market. That's how we do it. That's how we play the game. So it's all about the how it's all about how profitable. It's not about how profitable the strategy is. You can, like, someone might be trading the same strategy as you, but that person might not be profitable as you. Reason being that maybe the risk reward the person is taking is more than what you are taking. I love to take 1:2. Most of the time, you see that most of my trade are 1:2. Most of my trade are 1:2, and I have a reason for that. And that's because I have studied the pattern and I've seen that 1:2 is more profitable. If I take 1:2, depending on a particular the gap between my entry and my stop loss, so that's what will determine the risk reward I'm going to take on a particular trade. And since I've studied it over time, I see that it has been working for me. Yes, so I just want to show you guys that and let you guys realize that small profits in the market can make up a big portion of wealth for you. So taking 1:2, 1:2, 1:2, if you trade for 10 days, and let's say you take, maybe in those 10 days you trade like 30 times, I'm very sure that you are going to see nothing less than, let's say you are risking $1 for each trade. You trade 30 times, right? You are always taking 1:2 depending on, the gap. So let's say you are always taking 1:2. 1:2, that's like 60% if you have no loss. But let's say you have 5 losses. That means that you lose $5 and then you've made $50. So as you can see, that's a very profitable strategy. But for someone who is taking 1:3 or 1:4 or even more, that's why some people flop, right? So just make sure you have rules and you also follow your rules. So that's it. Make sure you subscribe to my channel. Make sure you like my videos and also comment whatever you want me to talk about. Whatever video you want me to make on trading, tell me, I'm going to make it. Good day, guys.